you can see that the dollar has been on an upward move against the Swiss since July. It has created the basic foundations of a trend change, and the last final obstacle that should lead for an explosive move to the upside is the 95.94 level. And if you look at this chart, you can see that the dollar has been coming down, put the momentum low, then it gave us the first trend changing signal. It continued to break above the highs, putting the new trend. And if you look at the chart for the Swiss franc, index, you would see that it is basically the upside down for the chart of the US dollar. This thing has been going up, it turned around, there is your structure, and it's sitting here at the structure at the 104.30. If you look at the chart for the dollar, it's the upside down because this is the dollar versus the Swiss, and now the 104.30 that we have as a structure point in the Swiss is actually the 95.94. So if you think about it, 95.94, the four figures that we have, which brings it back to par, is the difference between 95.94 and the par number. So getting above the 95.94 is going to be the beginning of a continuation of the upside. We closed the week at 95.70. So this makes our trade, and as you can see here on the intraday chart, you have an upward trend to the upside. There is your structural point, the 95.94. So we closed the week at 95 on the daily, 95.70. So this will make our job very easy for the Swiss. We're going to buy above 95.94. This is our buying point. It is our structural point. And of course, in this case, it is going to be our stop. So anything we're going to do on the long side is going to be above the 95.94. Then we're going to look and find the place where we have to take a trade. You always have to do the what-if scenarios. So we can only go short below, if it breaks below here, that we can be construed as a minor selling point, and therefore I'm going to make it red. These are, when I put a red line on my charts, that indicates a selling point. This is how you do your trade plan. You put a red line, this means you're going to sell below that. So you don't have to write notes and stuff like that. When you see a red line, it means you're selling it below the red line. You see a green line, you're buying above the green line. So visually you can plan your trades. So we're going to be selling it below the $95.40. This is going to be our selling point. And if I do, I'm going to place my stop right above those daily highs, which is 95.64. So my stop is going to be there. So let's put these numbers in. I'm going to sell below 95.40, and if I do, I have a structural point that you can see on the daily chart at 93.15. So my structural short point, if it does break, then this is where it's going to come to, 15, and my stop is going to be 0.9572. So for the dollar Swiss, I'm going to buy above the 95.94, which is our structural point. So it's going to be my buy signal, my long point, and my stop for the long position. On the short side, I'm going to go short below 95.40, which is an intraday selling point, structure point. And if I do, I have a short structure point, which is the 93.15 from the daily chart. And if I go short, I'm placing my stop above the market side, which is above the 95.72. All right, that is the dollar Swiss right there. So let me save my recording.